Hey guys, let me know if you can hear me or not. We'll get going here in a second. No, that didn't change. Hey, can someone let me know you can hear me? Just put a comment. Yeah, I can hear you. All right, cool. Thank you. Yeah, all right. We'll give it one more minute. Let it go. More people pile in here, and then we'll get going. Come on. Oh, duh. Idiot. So you're at 6650 right here. Three. Then we are pretty sure that's what we had. Yeah, cool. All right. All right, we can get going here. We waited long enough. Yeah, so right, get into pre-market prep real quick. Zooming out globally, kind of like where we always start, right? Just understanding, right, coming from a swing trading time frame, how things are looking, and then we'll drill down into zero DTE. Swing trading right now, right? Starting with the market trend model, everything here is bearish. Been trending lower since last week. Really no signs of let up right now. Filter tick selling. Yesterday, really in the afternoon, was a linear down day. Or that's 2 days ago, sorry. And then yesterday was more or less choppy day. You can see, 52-week nodes significantly outpacing new highs. So, everything in the structure right now is not good from a swing trading time frame. If you're dying to get long to the long side, really want to tighten up that duration much shorter time duration right now. A couple other tools, right, that kind of confirm that. One, looking at the SPXA complex, right? This is the expiration in 2 days. We're just well below the transition zone. We need to get this basically 6,700 there. Put dominated territory. True zeros. We're starting to trend below the true gamma zero line. Again, that's really never good when that happens. One thing to note, right, what we'll be seeing on all kind of 3D service models throughout the various cuts we look at today is, there's potential for Vanna rally to come in. The way that manifests, right, is a reduction in volatility. And then we want to see the calls come into the complex. And so we'll talk about how we see that on an intraday basis. Just looking quickly at So the VIX is at 24. Yeah, I'm sure you guys have other ways of looking at volatility, but right, that's good enough for the purposes of what we're doing today. So volatility certainly higher, hence the kind of Vanna potential. Looking at SPXP complex, again, same thing, but dominated structure, really nothing but red. As far as we can see, we need to get back above 67.40, so top of the transition zone here, for any to really consider any type of, sustained bullish move higher. Right now, puts are dominant above and below spot price. So, would be expecting a lot more volatility there. Remember, the volatility cuts both ways. So we could absolutely get kind of a rip your face off rally or continue to melt down. And just because we get a face rip through the upside doesn't mean that, all is well again. That's a condition of the environment that we're in. So just make sure that you're not getting those two conflated just based off a directional move. We really want to see confirmation with our market trend model, sustain a move higher. So you filter tick buying come in, see call buying come in via our intraday volume analysis type stuff, and getting above the transition zones. Right, because there's a difference in price just moving higher and structure actually supporting that move higher and shifting day over day. Again, true zeros here on the SPXP. These are all trending lower, spot price below these. So again, this is not a healthy chart in kind of a bullish foundation when we expect a sustained move higher. Again, looking at the 3D surface models, potential for Vanna rally, but again, conditions that we have to see. Of all redux, right, and calls going into the complex. So that's kind of the overall swing trading environment. Let me know if you guys have any questions. But hopefully, our stance from what we just went through and right, just a couple tools that we look at every day, right, that took 5 minutes to look at. We can understand that not a good environment right now for swing trading. Yes, we could go higher, but don't let something that happens one day kind of, I don't know, influence your thinking when, we have tools to look at the structure and whatnot. Just looking at, something else I like to look at, go really quick. This is just some I do in Excel with the data that we have. I just have these quick scatter plots so we can see, stocks that are call and put dominated. So right now, this is our call dominated scatter plot. So you can see that there's 21 stocks that, are above the 21 50-day moving average, call dominated, all that good stuff. So really not many good options right here. And of those ones that are call dominated, right, there's only a handful that are above its P-trans level, which is the upside acceleration zone. The way you can read this chart, right, is the x-axis is distance to P-trans, which is our key acceleration level. So to the left means it's above, to the right means it's below, and then the y-axis is distance to plus GEX, which is our upside target right now. So as an example, CNC, right, above plus GEX by or P-trans by 1%, but it has 9% up to plus GEX. So really good risk to reward in a vacuum, but keep in mind the environment is really crappy right now for long-sided trades in general. Going to the bearish scatter plot, like look how many stocks are here. Like there's a bazillion stocks. Normally it's flip-flopped in a constructive bullish market. We have loads of stocks on the call dominated scatter plot and hardly any on the put dominated scatter plot. So again, this is just another good quick indication of the market's health in general. Here we're looking at the core stocks, which you can just think of as kind of the Mag 7, large liquidity stocks. JP Morgan, Broadcom, Oracle, and then all the Mag 7. What we can see here is we have one name above its P-trans level. Everything else is below its P-trans level and below its P-trans level by a good bit too. So again, not healthy looking at that. Same thing. This is just looking at the inverse, just looking at the put scatter plot. So again, just not a very good look here. Looking at sectors, again, all the sector ETFs below its P-trans level, a ton showing up on the put scatter plot. So does that make sense? Are those scatter plots helpful and just trying to visualizing what we've been talking about? Just like another way of, looking at SPX, looking at the tick, and then looking at what the actual kind of key stocks in the market, what those structures are telling us as well. So yeah, I don't know. I assume that's helpful. If not, then I don't know what to tell you. But All right, you can get to 0DT now. I realize that's why a lot of you folks are here. So all good. Again, we have a very robust write-up in the Discord. I'm not going to go through it all here. I trust you guys can read well. Right, but we go through the transition zones. We go through a ton of the key levels, kind of if-then statements, all of that good stuff. Let me just pull this up here. Yeah, so right quickly, it always starts with the transition zones. Like that's where all of our analysis starts. So thing to note, where are we opening right now? Set to open at 66.17 is the implied open right now. You can see we're not even above prior day high at all. Like we're right in the middle of the range, kind of right in the middle of the pre-market action as well. So just keep that in mind. We said 17 is where we're at. So we're more or less opening where we closed yesterday, which is below the transition zones, right? 66.50. That's kind of the key overall master fulcrum in the complex. It's the bottom of our DEX transition zone. So yeah, well below that right now. If you're bullish on the day, you want to see, and if you're wanting to kind of play the Vanna rally, right, you want to see at push above the transition zones, right, and then continuation of calls coming in the structure, and we'll get to how you see that in a second. All right, to the downside, obviously bottom of our drunken sailor zone, which is kind of key first goalpost on the day. And once you get outside of those goalposts, that's where the intraday volume is going to be very important to see if we can sustain that move in that direction. So right, just going down the goalpost, 6,600 obviously going to be a key level to the downside. It's a key round, hole, psychological level, whatever you want to call it. It's probably that key convexity level to the downside. It's negative gex. So right, strike with the most, put gamma to start the session. What else we got to say? Yeah, and then right, there's a bit of a vacuum down to 65.80, and then 65.50 is a massive strike to the downside. It's going to take a lot to get there, and then if we want to continue that move lower, especially in a put dominant environment, really important that you see a ton of put speculation move, because if you start right to kind of wobble there, that's where you can get a face ripper from that monetization action. But again, just keep that in mind. Those are a couple of kind of the key strikes that we are watching. I believe in the pre-market, we got it right up to the bottom of our DEX transition at 65.50. It looks like multiple times and have failed miserably every time below there. So we're at 66.25 right now, I think is what we said. So yeah, I mean, it's a significant strike there, but bias is certainly lower right now. 6,600 again, kind of that first key target to the downside. What else? So getting back to our intraday volume analysis, right? When we talk about wanting to see in the money calls, or not in, but call speculation come in, put speculation come in. That is what we see via this our volume analysis. One of the ways that manifests is that we call this a vol-M chart. So right, just intraday volume momentum of the SPX 0DT. We look at the calls on top, green, puts below, red. We look at that volume. So we bucket it in 5-minute intervals throughout the session. We found the middle point of that distribution, which is centroid, and we plot that so we can understand how the behavior of speculation is trending throughout the day. Not only that, but it helps us understand kind of all else equal from a point in time to the close, what is the likely path of those centroids, which price follows. Because centroids represent where transactions are occurring, and price follows where transactions are transacting, or you're able to understand where price is likely not to go. So again, here's just a quick snapshot for you. This was at as of 1:20 p.m. yesterday. Again, these are our lines of best fit, which is just a linear regression of those centroids, so we can understand, right, basically expecting chop into the close, which is more or less what we got. So yeah, kind of a key level analysis of understanding where the key levels are at, and then couple that with how people are actually transacting once the market opens is going to be very important. And so back to that Vanna rally, right? See a reduction of volatility. We see basically a 45-degree angle up of call speculation, which is indicative that calls are coming into the complex. That is the behavior that you want to see, where you can kind of get that sustained Vanna field rally throughout the session. So that is kind of the character, shape, pattern, whatever you want to call it, of the centroids that we will be watching. So with that's all I got for you guys today. Let me know if you guys have any questions. Obviously, we have NVIDIA earnings tonight, so that could be kind of a big catalyst potentially for the market. Right now, NVIDIA does not look very good. Let me pull up. Let me put on the pre-market script real quick. Well, yeah, so it goes back to the scatter plots that we were looking at earlier too. I could have just looked at that. Yeah, I mean, NVIDIA right below its P-trans level, so, isn't really great right now. Obviously, from a price action point of view too, below all those kind of institutional moving averages that people watch. So, momentum is not favoring your side either. So yeah, we'll just kind of, I don't really have any other grain insights for you on NVIDIA other than that. Yeah, I'm not sure if there's any other single stocks y'all want to look at. Tesla, I mean, looks like garbage. I mean, all these names, we can just go here real quick. Yeah, I mean, just from a price action point of view, like a lot of the big names have just been destroyed lately. So keep that in mind again. But again, coming back to the structure does not look that great. Coming back to NVIDIA too, real quick, this is our GEX ratio, right? A measurement of cumulative call gamma relative to cumulative put gamma in the structure. So, you can think of it like a put call ratio, but it's superior in our opinion because you have that time element, which gamma represents. So we can really understand kind of how traders in the name or short-term traders are focused, which is probably what us on the call care about. And you can see that there's just been a real deterioration in call speculation. It's above 1, so calls are greater than puts, but that's the case in most single stocks. But what matters is what the trend of speculation is right now. And so we can see it's kind of at its floor. It's at its floor right now, which means rarely has it ever kind of gotten less call speculation than what it is at right now. So maybe it's oversold. I wouldn't be like, long leveraging your portfolio here just because of this single metric. This just tells me that there's been no real call speculation. So I would prefer to wait to see call speculation come into the name, getting above its key transition zones, and then, potentially the next leg up. So that's the way that I interpret this is just, it's at kind of bottom out, washed out levels down here below, but that's not really a reason to enter. In my opinion, you want to see, just like the Vanna rally, right? You want to see that volatility reduction, calls coming in. Same thing here. You want to see that evidence that the call speculation is moving higher, which is going to help, propel price higher as well. Is that helpful? George, ripped to 6750, then down to 6400. I assume you don't mean all of that today. That would be a wild day. Do 6,400. That would be a heck of a move. Peter, Qs. Yeah, I mean, the keys don't look any better. Yeah, so here's the Qs. Again, put dominated structure. Very, very sloppy transition zone right now. Looking at 0 DT, kind of right in the middle of its kind of key level, 600 to the upside, 59 and 50 to the downside. And we can just see a whole lot of put speculation down here. I don't have that. We'll see what the surface models look like real quick. But yeah, I wouldn't say the Qs look any better. And also keep in mind, Peter, that the large individual components that make up the Qs look like crap. So yeah, so I mean, looking at net stat, right, which is a summary of our 3D surface models, right? We can see, positive delta from a delta point of view. Puts are certainly in control. Out of money versus in the money, we call that a locked horns condition, right? Because you have the two opposing forces going at each other, as opposed to like out of money puts, in the money puts, control, or out of money calls, in the money calls. You have those opposing forces, right? But puts are, in magnitude much larger than that. You can see from a net charm point of view, all else equal, going to have a weight weighing down on us today. But then we do have this Vena potential where, again, like we talked about on SPX, see that volatility reaction, see those calls coming in, could have potential for quite an aggressive rally if we do that, especially with the VIX at 25, right? So keep that in mind as well. Does that answer your question, Peter? CRWV probably got destroyed. Yeah, I mean, this thing has been absolutely smashed. I don't have a ton of positive things to say about that. Bitcoin continues to struggle, so CoreWeave is probably going to continue to struggle as well. CRWV. Yeah, I mean, this structure is just super sloppy right now. Just a ton of, back and forth between call and put dominated stocks. MOH. I mean, there's 40,000 total open interest in this name, so it's not meaningful by any means. MOH, Malina Healthcare. Yeah, this is not a very interesting name either. So all right, with that, I'm going to wrap it. Right, we're almost at the opening bell, so we'll be in the Discord here a little bit, streaming the market trend model. If you see anything interesting, all that good stuff. But right, just looking at SPX. Where did we close? Well, yeah, we're right around the close of yesterday. Right in the middle of the pre-market range. So we'll see what happens. I mean, break below. Yeah. So what I'm looking at is a break below pre-market low, right? Then we're probably in business down to 6,600 at least. And then, if the tick, starts firing, or, if we break above 6,650, which is the pre-market high, then we could see that Vena rally potentially come into effect. So these pre-market highs and lows are pretty good secondary pillars to our transition zones today. So I will be intently watching those for sure to see what happens. So with that, y'all have a good day. Best of luck. Keep your heads on swivels out there. Volatile times. So, and then again, NVIDIA earnings tonight. So, all right. Well, thank you all.